Good morning, everyone. Good morning. It is Monday morning, October 28th, 2024. It is so good to see you all this beautiful Monday morning. For our Monday morning touch point, we will update the new listing to pending ratio, the single best leading market indicator available for our entire area. What is going on with the market? Do a complete market overview, looking at inventory, pricing, how is the month looking, average sold, median sold, the number of properties sold, you name it, we're going to go over it. We're going to look at the bond market, what is going on this morning, what's going on with rates. And also, we are going to make some predictions on what's going to happen over the next few days, more so next 2 weeks or so, related to rates. If you did not get a chance to watch or listen to our Friday meeting, things are playing out exactly how we predicted on Friday, and we will talk about that. Lots to go over this morning. Excited to have you all here join us. Want to remind you that we do have our Tuesday morning mentorship meeting tomorrow, 10 a.m. That is the only meeting in the entire week that we do not record because we talk about personal things. We talk about personal transactions, details of transactions. So we're not going to record that and make that available across the entire internet. And then we have our Wednesday meeting. We're going to go over the contract proficiency challenge, look over the new changes to the contract that are effective here in the next few days, and then do a real estate training. And we have our Friday meeting. Do not forget about that. Be sure to join us for our Friday meeting. Let's go ahead and get started, you all. Lots to go over this morning. As you know, we are going to start by updating our famous new listing to pending ratio. Like I said, the single best market indicator that shows us what is the strength of the market in relation to inventory. Want to remind you that all of the information, new price increase, price drop, back on the market, active under contract, will lock tonight at 11:59. So when I update this tomorrow morning, all of these fields will be locked, but the pending will be updated over the next few weeks. So we're going to start today by going backwards in time and updating the pending information, because we know that realtors and builders are really bad when it comes to updating some of the historical pending. So that's what we're going to start the morning by going backwards, going to October 14th all the way through October 21st and updating the pending data. I want to remind you that this is for the 6-county area: Travis, Williamson, Bastrop, Hayes, Caldwell, along with Burnett counties. So let's go 14th through the 21st for those 6 counties. And we're going to get a reading of, and also this is for residential, we're going to get a reading of 366. That's going to give us a ratio of 0.77. Not bad. Let's keep on going backwards in time from the 7th all the way through the 14th. That's going to go to 449.79 ratio. Then we're going to go from the 30th to the 7th. That's going to be 478.76. 23rd through the 30th, 555. That's going to stay steady at 0.90. Now we're going to go from the 16th to the 23rd, 518. We don't have to update that. So we can see that a 0.77 ratio, slightly lower than the previous week at a 0.79 ratio. We knew the ratio was going to slow down by a little bit because rates have picked up. And they've picked up quite a bit. I mean, we were at 6.08. This is the Fannie Mae average across, I'd say, a few hundred lenders across the entire nation. This is a lagging number because what they do is they report at 11 a.m. our time what the average rate was for the previous week. So it's always going to be a little bit lagging, meaning if rates are going up, this is going to be lagging. If rates are going down, this is going to artificially show a lower rate. If rates are going up, if rates are going down, it's going to artificially show a higher rate. If rates are going up, it's going to artificially show a lower rate. But this is a rate that they've been publishing since the mid-70s. This is the rate that I use for all of our formulas. That's the rate. It's public. It's known to everyone, even though it's lagging a little bit. It is wise to be consistent when reporting data. That is why we use this rate. Let us start updating the 21st through the 28th number of new listings. Whoa! A big drop of 686. That is a big drop. Last week, 864. So far this week, 686 new listings, which means that we're going to end the day probably right around the 750s or so. Let's take a look at last year. Let me just adjust this just a little bit. So we are already down 70 listings compared to the same week last year, down 28 the week before that. I'd say we're going to end, if I change this to 750, that means that we're going to be down 6. Not a huge amount, but we are currently at 686 new listings over the past 7 days. Keep in mind, I will update this tomorrow morning. I will include the updated with the email reminder of our mentorship meeting so you can have the latest and greatest. But we are starting off the day with a very low figure. Hopefully, we will have a high figure on the active, under contract, and pending, and that's going to drive the ratio up a little bit. Price increase, 105. Low figure, very low. Last week, 112. Let's take a look at price decrease. 1247, that's going to give us 92%. Take a look at the percentage last week, 94%. And that's the highest number that we've seen since July 15th. So far today, 92%. Back on the market, what's going on with that? 147. That's going to give us 21%, slightly higher than last week. We knew that was going to happen. We have noticed an increase in transactions that are falling through because of financing. We also had a situation where a buyer on one of our listings noticed that some of the recent sales in the neighborhood had huge discounts, and they actually terminated the contract under HOA addenda because they were no longer comfortable with the amount or the price that they were under contract. And they terminated under HOA addenda, which they have the right to do that. But of course, it was very disappointing for the seller. Here you go under contract, your past option, the property appraised, we're past appraisal, but then they noticed a few properties within the neighborhood close. They had massive discounts, massive price drops on those closings. And that buyer said, you know what, I'm out. And they asked the agent, is there any out to the contract? The agent said, well, you could terminate under HOA. They submit a notice of termination. Contract falls through. Very disappointing for the seller, of course. But buyers are looking at what other properties are closing. So we were expecting a slight increase in back on the market. And of course, we see this through the data. Active under contract, 405. Pending. This is where you get to guess, you all, how many pendings. Let's go ahead and get some guesses going. We're going to go for 5 guesses this morning. Melanie Price, go ahead and start us. You're usually the first one to post pendings. What is your guess? Melanie Price starting us off at 205. Let's get 4 more guesses going. One down, and we've got, let's just get a few more guesses going here. Few more guesses going. One down. Come on, people. One down. Okay, we've got Violet coming in at a fairly bullish 222. Michael at a very bullish 264. Joe coming in at 220. Not a bad guess at all. Y'all have got some good guesses. Let's get, do we have the 5? Looks like we've got one more to go. Let's just go ahead. One more to go. Okay, Rob coming in at 256. Let's get this number, you all. Okay, we're at exactly 200. That's going to start us off at a 0.73 ratio, which is not bad. It's not a bad ratio to start the day. The reason why is because of this shockingly low number of 686 new. Yo, why do you think we've got 686 new? What do you think is going on here? Why do you think the number of new listings, I'd say, even plummeted? What? Let's get some feedback going. What do y'all think's going on? Are people just waiting for the spring, going into the holiday season? Okay, Michael, good point. Melanie, everyone is waiting. Okay, election, very good point. So there's this big pause going on right now. Hey, let's just see how things play out. I would agree with you all. I would say, 20% seasonality of real estate. We've got, Halloween coming up. When is that? Thursday. Why would I put my house on the market right now? You've got everyone prepping for Halloween. Maybe we're going to get a little bit of an increase post-Halloween, especially with Halloween following on a Thursday. Let's just kind of get that over with. Let's see how this election plays out. Let's see what's going to happen towards Thanksgiving. I expect a pretty dramatic increase in new listings come February. If you have a seller who has indicated, let's wait until the spring, my target would be first week of February. Come in strong, come in price right, perfect house. Let's go ahead and list it first week of February. We have a very early selling cycle after Super Bowl. When is Super Bowl? I have no idea when Super Bowl is. When is Super Bowl? I think I've only watched one Super Bowl my entire life. When is Super Bowl? When is that? What's the date? Do we know the date?
For Google, I'm showing February 9th.
Oh, February 9th. That's football, right?
Yes.
Okay. Professional, right? Not college. Okay, we got February 9th. So a week after Super Bowl, there you go. I think football would be more exciting if, I don't know, I guess it is exciting. I don't want to get y'all too upset this morning. I like football. Football's fun. Except for watching UT when it's 105 degrees outside and you are being baked to death. That was miserable. I'll say that much. But we've got 200, you all, 200 pending. That is a fairly low figure, but we do have a 0.73 ratio because of the new listing. It's going to be very interesting to keep tracking this data over the next few weeks to see how the election plays into how many listings are going to come in the market shortly after the election. Let us update the monthly data. First thing we're going to do is we're going to go back to September and see what the update is for the month of September. That's going to take us up from 1816 to 1819. Any updates for August? August, we're going to go to 1861. Nothing changes. Let's start updating October, see what's going on. That ratio for October, I would put that ratio at 0.7. When we update all this, I expect this right here to be 0.7. Let us see. 3115, 3,115, 3,115 new listings so far this month. Last month, 3,691. What about October of 2023? We had 3267. We're at 3115. Are we going to beat next? Are we going to beat last year? It is the 28th. We've got what? 28, 29, 30, 31. Are we going to get 150 listings between now and Thursday midnight, 11:59? I'd say we are. I'd say we're going to beat last year on the number of new listings. Single digit, but we will beat it. Price increase, we are looking at 493 price increases. Let's take a look at price decrease. We are looking at, let's see here, 5,227, 5,227, 91%, slightly better than last year. Last month was 92%. Last year was 90%. So we are slightly higher than last year, slightly lower than last month. 42% back in the market. That is the ratio. And that's right in line with the historical average. We went up quite a bit, peaked July at 56%, back down to 42%. Let's take a look at back on the market this month. We're at 613 back on the market, 20%, exactly like the past 2 months. I expect us to bump this up to 21% by the end of the month, but we are at 20% right now. Active under contract, 1,405. Pending, 1,202. Oh, 0.71 ratio. I was expecting a 0.7. There we've got a 0.71 ratio. Not bad. Not bad, especially with rates going up. Now, the average rate for this month, 6.36, quite a bit higher than 6.18. But is this the rate right now? Is this the rate for today? No, it's not. This is the average for the month. So we are noticing a steeper slowdown here towards the last week of the month. You're going to be shocked at what the rates are today. What did we say on Friday? What was my prediction on Friday of where we're going to land with rates between last week and a few days before the election? What was my personal prediction on Friday? Remember what I said? Said, hey, don't be surprised if we don't hit this number. And what was that number? It's the dreaded 7%. And Sonia said 6.875. Robert sent the sheet. Yeah, I've got a screenshot of that. We're at 6.875, which means if Robert is at 6.875, that means that most lenders that you're going to talk to are going to be at the 7 1/8. That's what that means. Even on Friday, I had another lender send me their rate sheet, and it was already at 7 1/8. I would say that lender is going to be at 7 1/4. So pretty amazing. Let's take a look how many sold so far this month. We are looking at 2,046, 2046. Withdrawn. You know what, y'all? I want you to guess how many withdrawns. Last month, 820. What do you think so far this month? More or less than that? Let's get 2 people to guess how many withdrawns, or you can just say more or less. You don't have to give the exact number. Okay. Oh, wow. Everyone came in swinging at more. We are already, you all, on withdrawns at 869. 869 withdrawn already. Amazing. And we still have 28, 29, 30. We have 4 days to go. So, Bertina, we could very well cross that 1,100 or get very close to that 1,100. Already, we've already beaten last month by 49 withdrawns. What about expired? Expired, of course, a lot of expireds happen between the 31st and the 1st, but we are at 366. So far this year, we've had 11,511 properties that were withdrawn or expired. 11,511. Why so many withdrawns for August? The reason why, Sonia, they missed the selling season. By August, if they haven't gotten an offer by August, by the end of August, it's like, you know what? We missed the selling season. I'm not going to write out all the way through the rest of the year. I know my listing agreement expires December 31st. I don't feel confident that we're going to get an offer between now and December. Let's just go ahead. We missed out the selling season. Let's go ahead and just withdraw the property and then relist it towards the beginning of the year. I noticed that we had a lot of withdrawns, and that was the same narrative. That's what everyone said. I don't feel confident that I'm going to get the price that I want. I'm noticing price decreases. I'm not a fan of that strategy. A lot of our clients where our agents were able to not convince them, but educate them on, hey, we're noticing a lot of withdrawns. We're noticing a lot of expireds. Why don't we ride this out? We are going to see a decrease in showings, but let's ride this out. We're going to have less competition. All of a sudden, their property is highlighted because we do have less competition. We've got less active listings, and now some of those deals are under contract. So unless there is a better reason to remove the property from the market, familiar, family, personal reasons, whatever the case might be, I am a big fan of just riding out the market. That tends to be the single best thing to do, unless they have to remove the property from the market just to do more make ready, improve marketing, whatever the case might be. If the property is perfect, price right, ride it out, hunker down, ride it out. Be patient. When you look at the monthly comparison, let's do the yearly comparison. Wow, this is amazing. 152 less new listings, 248 less price increases, 1,206 less price drops, 101 less back on the market, 4 more active under contract, but 412 less pendings. We could very well end the month on the positive active under contract plus pending. We've got 4 days left. Can we squeeze out 412 additional pendings or 408 combination of active under contract and pendings over the next 4 days? I would not be surprised. I wouldn't be surprised. This is really good. This was positive, 11.2% increase on the number of active under contract plus pending year over year. It was a good September, and those properties are now closing in October, and we are seeing a very positive October, especially when you look at pricing, and I'll show you the data here in the next few minutes. The big question is, how will rates affect the number of pending properties now that we're at 6.875? That's going to be the big question. This information will be published as a PDF here shortly, available to you on the drive. You can go to Insight and Statistics, scroll down, go to New Listing to Pending Ratio, and then you will be able to see the entire 59-page summary with all of the graphs, charts, and everything else. I will be sure to publish this about 20 minutes or so after the meeting ends. Right now, let us transition towards the mortgage market and the bond market and take a look at what's happening today. Started out really nice and positive. Take a look at that. We started really high, went back down. So by 8 a.m., it was looking pretty positive, but from 8 a.m. up until now, 10 a.m., just obliterated. So we are now up 2.5 basis points. Let's go back 3 months. We are approaching another repricing line. Let me go back 6 months, and you can see that last time we approached this repricing line was back July 24th. If we cross this repricing line, look at this. We've got another one not that far off. So it's very common for us to cross a repricing line and then just shoot up past it, especially when the repricing line is very close to each other. So we are very close to this territory right here. This puts us all the way back towards the first week of July. And of course, we all know what rates were like first week of July. Yeah, we were right around that 7 1/8, which is 7.125. And we are very, very close to that repricing line. A big movement over the past 2 days. So what caused this? Let's take a look at the economic calendar and let's see what's happening today. Let's see what's happening this week. Extremely important week this week for the bond market. Today, we have a few auctions that are happening here in the next 3 minutes. Hopefully, they will be able to publish these, and we'll see what these auctions came out at. Equity market is actually doing quite well. Very well, equity market. Take a look at that. We've got the Dow Jones up 325 points. We've got the NASDAQ up 103. which is really not bad at all. As a matter of fact, I hope it actually slows down just a little bit, because I do have a purchase order in for a gold ETF that I've been tracking for a while right now. So I do look forward just to pulling the trigger on that. And that's FGDL. I'm not giving you any recommendations, but I do have an order in for Franklin Responsibly Sourced Gold ETF. I've been tracking that for a while. Should have bought it a long time ago, but it is a good one just to go ahead and jump in. So I'm excited for that one. But I'm not giving you any recommendations. The only recommendation that I give is forever stamps, guaranteed never to lose value. But I am really excited about FGDL, but that's just me. No recommendations here. Don't ever ask me for stock recommendations. But we do have a negative reading for Dallas Fed Manufacturing Business Index. No forecast on that. The previous was -9. This came in at -3. We've got 1 minute to go. Lots of auctions going on. I like tracking the 6-month auction just to see what the demand for government treasuries is looking like. Tomorrow, we've got the house price index. When this data is released, we're going to be able to update a few of our charts. First thing we're going to do is we're going to update the house price index, Freddie Mac house price index. We will also be able to update the national market index. I am more interested in updating the house price index. This tracks over 300 markets and then the top 40 markets in the nation. I'll be able to update this tomorrow morning at 8 a.m. At 9 a.m., we've got Consumer Board, Consumer Confidence. We've got Job Opening Labor Turnover Report. They're expecting the number of job openings to drop from 8.04 million down to 7.92 million. We'll see what they say. I could care less about Atlanta Fed GDP now. I wouldn't even have 2 stars there. Whatever. I could care less what they have to say. But pretty important day on Tuesday going into Wednesday. This is a very important day. We have, of course, mortgage applications. I expect a negative week over week because rates have gone up so fast. We have the most important data on Wednesday is going to be the ADP non-farm employment change. They're expecting it to go down from 143 to 101,000. We've got some preliminary figures here, PCE, GDP. We do have pending home sales. That's going to be important. We've got crude oil inventory. That's a sign of the economy. That's going to be important. So by 9:30 a.m., we're going to have a lot of data on Wednesday that will influence and affect rates. The big one, though, is going to be a combination of Thursday and Friday because we do not have preliminary figures on Thursday. We've got real figures, and that's going to be PCE. PCE stands for Personal Consumption Expenditure, also known as inflation. Not only is this very important, but it is the number one figure that the Fed looks at for inflation, and that's going to be out Thursday at 0730. We are hoping for a very positive reading on inflation, but you can see that the core PC month over month, the forecast is that it's going to go up from 0.1 to 0.3. So they have a very high forecast ready for that core PCE. What that means is that it would have to completely blow out that number for the market to react in a negative way. So they're already saying, hey, we're expecting personal consumption expenditure to go up by 0.3% month over month. Yo, if we were to annualize that, let's go ahead and get the calculator. 0.3 times 12, that's a 3.6% annualized inflation. That is really high. That already blows the Fed's target rate of 2%. So they're already saying, hey, we expect inflation on the core PCE, excluding food and energy, to go up by an annualized figure of 3.6%, way hotter than what the Fed wants it. The challenge is this: if it comes in at a 0.3%, guess what the market's going to say? Okay, well, it's right in line with forecasts, not that bad. Well, true, but it's a high forecast and it's really, really high. Hopefully it comes in lower than forecast. Hopefully the market likes that. Thursday, 7:30 a.m., very, very important day for the market. And then we've got additional PC price index. We've got personal income. We've got personal spending, personal consumption. Huge day for the market. Our hope is that even though they're forecasting high, that it either hits the forecast and the market sees that as, okay, well, at least we hit the forecast, or that it's under. If it comes in hotter than a high forecast, if it comes in at a 0.4 times 12, it's annualized at 4.8. That would be devastating for the bond market. That would be devastating. We would see an increase in the yield. We would absolutely cross that 7%. It would be really bad for not only the mortgage-backed security market, but also for the government treasury market. And then we go into Friday. That's also going to be a huge reporting day. It's all about payroll. They are coming in really bearish. They're expecting non-farm payroll to go down from 254 to 111. So they're being very I'd say, aggressive on the inflation and very timid on the job. That's what the market is positioning. Very aggressive on inflation and very timid on jobs. We're just going to have to wait and see how the data plays out. They've been so far off on their forecast. I don't even trust any of their forecasts. I don't know how in the world these fools come up with these figures. They're wrong all the time. So we're just going to have to keep really close track of the market to see how it affects the treasury market and also the mortgage-backed security market. But we can see this, you all. It is not slowing down. We're at 4.277 10-year yield. And we know that this does not cause rates to go up. It correlates to rates going up. We're at 6.875 this morning, conventional 30-year. We're at 6.25 for FHA VA USDA. Wow, 6.875. It's surprising, but it's not surprising. That's exactly what we said was going to happen on Friday. We have a pullback for government yields, government treasuries, for mortgage-backed security. There is a pause going on right now, I would say because of the election, 80% because of the election. What in the world is going to happen over the next few days? And if we do not have a decision by election night, then this period of uncertainty is going to extend till however long it takes for there to be a decision on the outcome of the election. But there is a pause going on right now for demand in mortgage-backed securities. So my prediction is that we can expect an additional pullback between now and the election next, 9 days now? Is it 9 days? I already early voted, so I have no idea when the election day. 9 days? I think it's 9 days. 8, 9 days, whatever. Early voting, by the way, was absolutely fantastic. I was only in line for 10 minutes. It was great. So I'm a big fan of early voting. We're going to notice an increase, in my opinion, for mortgage rates leading up to the next week and a half. And then whatever the outcome of the election is, hopefully we're going to know that evening. Whatever happens, happens. The market wants clarity more than anything. Just tell us what the playing field, tell us what the rules are going to be. We'll adjust to anything. We just need to know what are the rules over the next, 2 years, 4 years, whatever the case might be. So the market, once there is a decision, I do expect a drop in rates. So we've got an increase leading up to the election, and I am expecting regardless of the outcome, a then sudden drop. That's what I personally think is going to happen. That's what I hope is going to happen. But I would not be surprised if we did not see this get up to the 7 1/8, which would be 7.125. That will cause additional pullback in demand for real estate. People, we can see right there, number of new listings. There's the big pause going on right now. And then we know the outcome. People adjust to that and we move forward. What's going on with inventory? We've got 14,306 active listings so far this morning. That is a drop of 8 from Friday. That's a drop of 173 week over week. 525 month over month. We are up 14.5%, but take a look at pendings. I could not be more encouraged with the number of pendings. We're at 4,130 pendings. Take a look at the percentage year over year. So even with rates going up, y'all, we're up 6% year over year on pendings. Like, this is amazing. This is so encouraging. Let's take a look at the pending chart. Look at that. We're up 6%. This day last year, we had 3,897 pendings. We've got 4,130 right now. I would not have predicted this. We're talking about a resilient market in the midst of an increased rate environment. We also have to acknowledge that 30.04% activity index for new construction and 43% of all pendings are new construction, even though that only accounts for 28.9% of all active listings. But this is good news for us because we've been focused on new construction for many years. We love new construction. Y'all are doing an amazing job exposing your clients to that new construction inventory that has really nice pricing, really aggressive pricing. Charmine even shared a situation where a property in Deerbrook, originally listed for $650,000, dropped down to $550,000. She got it under contract for her client for $450,000, $450,000, originally at $650,000. Client, of course, is happy. Builder's happy. Charmine, of course, is happy. It's a win-win for everyone. So new construction right now, they are reacting to market conditions in a really fast way. And of course, clients are seeing the value in that. When you look at active listings, we are up 14.5% year over year. Activity index, we're down by only 6.8% year over year. Months of inventory, we are up 16.5% year over year. When you look at all the active listings, 14,306, 55.9% of those have had a price drop. Let's take a look at type of market cities. Out of the 30 cities that we track, 40% in a seller's market, 37% in a neutral market, and 23% in a buyer's market. When you look at zip codes, 40% in a seller's market, 25% in a neutral market, 35% in a buyer's market. We now have 26 out of the 75 zip codes that we track are now in a buyer's market. Sold to list price ratio right now is at 97.07. This is going to be the second lowest reading so far this year. January, we were at 96.77. We're at 97.7. 10.6% of all closings so far in October have sold over list price. 19.9 at list price, 69.5 under list price. Let's take a look at a few more things. We're going to take a look at activity index for the city. We've got Austin at 19.8%. Let's look at some historical. Austin, little bit of an increase. We bottomed out at 18.3 in July. Then we gradually started going up 18.4, 18.7, and now 19.8. Buda, be on the lookout for Buda. If you've got a listing coming up in Buda, take a look at that. We just hit a 1-year low on the activity index for Buda at 24.3. We were at 31.7. So there we've got a reversal on the activity index for Buda. We've got an improvement in Cedar Park. We hit a low of 20.3 in August. We're at 26.4. We did hit a low for Dale at only 5.6, a complete collapse in demand in Dale. I mean, collapse, overnight collapse. A really good improvement in Kyle. Look at the difference. So we've got Buda, we've got a record low in Buda, and then we've got a pretty decent reversal in Kyle. We hit 26.1% July. We're at 30% right now in October. Let's look at a few more. We've got Manchac. Well, that just absolutely collapsed down to 4.8%. We've got a record low 12-month for Manor. That dropped down to 24.5%. We were at 43% in February. We're at 24.5 right now. Little bit of an increase in Leander. We hit a low last month. Little bit of an increase, which is very encouraging. Let's look at months of inventory really quick. We've got City of Austin, record high inventory at 5.34 months. That's a 12-month high. Cedar Creek just hit a 12-month high. Cedar Park hit a 12-month high. We've got Lago Vista matching last month at 11 months of inventory. Leander also hit a record high. Lockhart, record low. Crazy. It's amazing what happens. But you've got Manchac, Manor, Round Rock, all hitting record highs. Wimberley, though, hitting a record 12-month low on inventory. We were at 10.73 in February. We're at 6.53 right now, which is really amazing. Let's break down some of the different price points and see what's going on with price points. Let's see. What can we glean from this data? Let's take a look at Kyle. Look how it just varies. You've got 9.4 months of inventory between 600,000 and 700,000, but only 2.3 months of inventory, 800,000 to 900,000. Lago Vista, over $1 million, 57 months of inventory. 57 months of inventory. That's going to be the highest inventory reading. It's going to be the over $1 million in the city of Lago Vista. Only 3% activity index. Just amazing. Let's take a look at activity index for zip codes, and let's look at some historical. Any record high, any record lows? 2.7, really nice increase in activity index from 18.4 to 33.3. That's really good to see. We've got 05 hitting a record low at 15.1. You can see the record low and highs by these dots. You've got high, low, high. So what I do is I have a dot on the highest and lowest. So you can quickly see if we've reached a record low or if we've reached a record high. 3.2, primarily Steiner Ranch. Tough market right now in 3.2. A collapse in demand in the 78732. We were at 31.5% activity index, very healthy in February, down to 9.1. That's going to be a record low. 3.5, massive increase in activity in the 3.5. We went from 12% to 28.8. Y'all, real estate's hyper-local. Hyper-local. It's just amazing to see. One zip code, best in 6 months. Other zip code, worst in a year. Real estate's hyper-local. Let's look at a few more things. I mean, look, Florence. Florence is struggling. But look at Georgetown, 78728 Georgetown. Really nice 3-month increase in the activity index. Just a nice line up. And then the other zip code in Georgetown, 78633, we just hit a record low. It's just unbelievable. We've got same city, 2 zip codes. One zip code, 78628, just hit a record high 12-month on activity index. Also Georgetown, different zip code, record low. Isn't that amazing? It's just crazy when you look at it this way. Just really amazing. You've got Buda. Oh, let's take a look at Round Rock right here. Yeah, Round Rock, we've got, look at, man, 664 from 40% to 19.9. Half of the activity, half of the demand compared to just a few months ago. Back in March, 40.3, really good March. We're at 19.9. Keep in mind, this is a leading market indicator. Let's take a look at months of inventory. 78701, over a million, 43 months of inventory. 43. You've got Leander between 900 and a million, 51 months of inventory. Just amazing. What's going to be the highest one? Looks like 01 is the highest one. 43. Do we have one higher than 43? Let's see here. 51. So Leander, no activity. You see how this is blank? Activity index blank, no activity. Meaning what? Nothing is under contract. Between 900 and a million, nothing is under contract, and we've got 51 months of inventory. So if you've got a client looking at the 900 to a million or even 900 plus in the 4-5, you've got room to negotiate. You can go in super, super strong, super assertive, very aggressive on pricing. All right, y'all, let's take a look at market cycle. Before we do market cycle, I'm going to do sales density. The forecast for the month, 2,233 closings. That's the forecast. That means that we are expecting a year-over-year drop of 5.6%. When you look at the cumulative sold properties for October, that's going to be a 2.3% drop year-over-year, 8.9% above average. When you adjust for population, down 21%, cumulative sold per 100,000 people, we're looking at 1,031. Better than 2011, better than 2010, not so much compared to 2009, worse than 2012. So we're looking at a 4.8% drop cumulative sold properties from January all the way through October. As of this morning, there are 18,460 agents within the Austin MLS. That is down 13.24% from the peak, which was September 2022. So when you look at the number of sold properties per 1,000 agents, last month, tough month, 113.7, worst September on record. But good news, October, not the worst October. October 2022 was worse at 118.1. The forecast right now is 121. So we beat out 2012. We're going to beat out 2010, beat out 2008. So it's good. It's good to say, hey, we're not going to have the worst October on record. Not something that we were able to say for the month of September. We're like, hey, this is the worst month on record. Well, right now, October, not the worst one on record. So we are seeing an improvement on the number of sold properties per 1,000 agents. We are statistically exactly the same as we were last year. Exactly the same. Last year, from January all the way through October, 1,304 sold properties from January through October. That means that 1.3 properties sold for every realtor year to date. That's what that means. That is a shocking figure, isn't it? And this year, exactly the same. 1.334 properties sold for every realtor year to date. Let that sink in, you all. It's just amazing. Absolutely incredible to see the figure displayed this way. Let's look at a few more things. Number of sold properties per month. This is what's killing 01. October 2023, 11 properties sold. October 2024, 5. 5. So we're down 55%. Okay, we might squeeze out one or two more, but 5. Look at 2-2. Only 2 properties sold so far. It's just, this is October 28th. This is amazing. Look at the drop. We went from 11, 9, 5, 10 in August, 3-2. Just amazing. So you can see the dots, record low, 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 low. Use this figure for your listing presentation. This is very insightful to show the client the peaks and the valleys of when properties are selling. I mean, you take a look at 78. Let's look at 7732. Where's 32? 32. There you have it. 21 properties sold March, 18, 21, 22, and then we've got 9. 9, which it matches October 2023. But that's a very low number. 9. Do we have any record highs here or any pullbacks? Let's just take a look at it. Okay, so we've got a decent 3.5 is doing well. We were at 6 in June. We're at 15. That's a 50% increase compared to October of last year. So you've got 3.5 is doing really well. 03, 04, these two markets are doing very well. You've got 2.8, 33% increase year over year. 5.1, you've got an 80% increase year over year. 5.4, Spicewood, 21% increase. And then you've got other ones that are, I mean, you've got Liberty Hill, 105 properties closed in July, 42 in October, 75 last October. So a really big pullback within Liberty Hill. That's going to drive months of inventory higher if we don't see an increase in withdrawns and expireds, which of course we are seeing an increase in withdrawns and expireds. Now let's take a look at pricing. Amazing to see what's happening with pricing. When you look at the average sold price, we're almost at $580,000 for October. We are at a 5.5% month over month increase on the average sold price for the month of October, a 3.5% year over year increase. A 5.5% increase, let this sink in. We're looking at possibly the best October on record month over month. It's like, look at that. A 5.5% month over month increase. If this holds steady, I recognize that more expensive homes sell earlier in the month, and then once you get towards the 25th to the 31st of the month or the end of the month, you now start having all of your first-time home buyers close. You have a lot of new construction close. That does drive the price lower. So I do expect a pullback. But the second best month on record so far is 2010 at 5%. I would say even with the pullback, we're going to be very close to that 5%. We could very well end the month of October 2024 as the single best month over month price increase. Isn't that amazing? So here we were talking about certain zip codes going down on price and everything else, and we've got an increase in withdrawns and expireds, but we also have an increase in pendings. So demand is not necessarily collapsing across the entire market. Certain zip codes are experiencing a collapse in demand, but as a whole, we are up year over year on pendings. We're up price-wise year over year. We're up 3.5%. That is the best figure going all the way back to October 2022. October is turning out to be a very, very bullish month for real estate pricing. Very bullish. On the median side of things, we are still down 20.91%. When you compare it over the past 24 months, we're down 7.45. When you compare it over the past 36 months, we are down 4.4%. On the median side of things, month over month, we're up 2.4%. Year over year, we're down 0.8%. We only had 1 month that we were up year over year. That was February of this year. We've been negative all the way back to November of 2022. If today is the bottom of the market and it is all upside from here, we will reach peak value 61 months from now, September 2029. And beautiful people, I plan on being around. So I look forward to seeing this play out. Let's take a look at the bond market. Oh my goodness. All right, you all. It's official. We have two lenders already repriced for the negative. We've got United Wholesale. We've got Provident. They are not expecting a pullback within demand for mortgage-backed securities. This bad boy is up 5 basis points. We're at 2.93. We are just a rocket ship towards this repricing line. But even without us crossing this repricing line, we already have two lenders repricing for the negative. I'd say these are lenders that should have repriced for the negative last week. They decided not to reprice for the negative last week, hoping that we would start Monday with an increased demand in mortgage-backed securities. That, of course, has not happened. It is actually going straight up, and these two lenders are catching up to the reality of the market. They just play their cards wrong, and now they've got to reprice early into Monday. But I cannot stress enough how important today is for the market. Let me do a refresh, or this entire week is for the market. Let's do a really quick refresh, see what these bond auctions look like this morning. Let's go. And we are, wow. Okay. Take a look at the 2-year note. Previous 3.52 auction result, 4.130. That is a massive change from the previous. Wow. Just amazing. And look how close we are with a yield on the 2-year and the 6-month. Very, very close. Investors are demanding a higher yield for long-term maturity notes. That is what, so it's in essence, wow. I mean, that is amazing. They're expecting a insanely high yield for a longer term maturity. That is a massive increase from 3.52. So it basically means a lack of confidence in long-term economic conditions, right? You've got a massive increase in the yield. I cannot wait to see what the 5-year note comes out at noon. I'm going to be glued to U.S. Treasury to see what because if we're looking at a 4.13, that means that we could very well reach a 4.2 on that 5-year. I mean, that simply means if the yield goes up, that means the demand is lower, right? It's like, hey, I don't want to hold on to this U.S. Treasury. So you're going to have to make the price so attractive for me to buy it. Right? They don't want to hold on to that. What does that point to? Well, I mean, it points to a lack of demand within U.S. Treasuries. Now, we do see money going into the equity market. That's certainly a part of it. I mean, you've got the equity market up across the board, but you've got a drop, a huge demand drop within U.S. Treasuries. And this correlates to mortgage-backed securities, right? We're looking at correlations here, not causation, but correlation. When you see demand within the auction plummet, which means that the yield went up more so on the 2-year versus the 6-month, you have to correlate this to mortgage-backed securities, which is the same investor is going to have lower demand for mortgage-backed securities. On average, an investor that buys a 10-year treasury, they're only going to hold on to it for anywhere from 5 to 7 years on average. Someone who buys a MBS, a mortgage-backed security, on average, they're going to hold on to it for 5 to 7 years. So when you see a demand drop for U.S. government treasuries, that simply means that you're going to see the same thing with mortgage-backed securities. If you buy a 5-year note, can they call it in before maturity? Good question. Not call it in. You can resell it in the open market. That's what you can do, right? So if you buy a 5-year note, you are giving the government money up front in relation to the value of your yield. And what it means is that the government is saying, hey, I will pay you, let's say 4% every year for a 5-year note. So the cost of that 5-year note, par is $100. So you buy it in $100 increments. So you're not giving the government $100 and then they're giving you back money every year. That's not how it works. What you're doing is you're giving the government $95. And then 5 years from now, you're getting back $100. So it's your effective yield that's being discounted on the front end. That's how it works when you buy a U.S. bill or a note or a treasury. That's how it works. So now I own that 5% coupon, that 5% treasury. I own that. So I'm getting back 5% a year, but I'm going to get back $100 5 years from now. That's how it works. Effectively, I'm getting back 5% per year. I'm just doing the math as an example. What I can do is I can sell that in the open market. I can sell that in the private market. So if I own a 5-year treasury and I paid $95 for it, I can sell it to you for $96. And then I take the gain, and then you're going to get $100 when that note is up for maturity. So let's say I sell it to you a year from now. Well, now you've got to hold on to that for 4 years, and then you're going to get back $100, and you paid $96 for it, even though I paid $95. So I made money, and then you're going to make money. Well, the opposite is true also. I could buy it for $95, and then all of a sudden, I need liquidity. I need that money. So now I'm like, hey, Violet, please buy this asset from me. An asset that I own is a liability to the government because they now hold that debt. And then you're like, okay, well, I'm happy to buy that from you. I know you need the money, but demand for this asset is lower, so I'm not going to pay $95. I'm going to pay $92. Well, what did we just do? I took a loss. I paid $95 to the government. They have my $95. They've already spent it a millisecond after they got it. They promised to give me $100. You're now buying it for $92. Well, who's going to get the $100? You are. You're going to get that $100, and you paid $92 for it. So what did you do? You increased your yield by paying less for the asset. That is what this is. This is the live trading platform. This shows you what is the yield, the constant maturity yield on a 10-year treasury. I could look at the price. Instead of looking at the yield, I could do the live pricing table. So here's the live pricing table. This is what this shows. A 10-year treasury is trading right now for $96.661. That's what it's trading for right now. So if I purchased it for $97 and I sell it for $96, I'm taking a loss. But if I bought it for $95, and let's go ahead and just click on view chart. Is that going to show me the view chart, live pricing table? And let's go 10-year. Okay, so it's not going to give me the, let's see if we can get the history here. Okay, so we've got, the last auction for the 10-year was on October 9th. And so it's not going to show us what the current price is. I wish they had a graph that showed me the actual price. They don't have a graph that shows us the exact price. They just have the yield, not the exact price, but so be it. But let me go back to live pricing table. This is a good one. Okay, there we go. So right now, this is trading for 96.6. So if I bought it today for 96.6, and then I sold it to you for 94 spot, right? Which is just $94. Well, what just happened? I took a loss, you took the gain. Now this 96 has what? A yield of 4.29. So you're effectively getting a constant maturity yield of 4.29. Once this matures, you get $100, but your yield is 4.29. Does that make sense? Bottom line, you all, what we're noticing, and we've got a few questions. Well, what in the world does this mean? Well, all it means is that demand for this type of asset is lower. It means that demand for mortgage-backed securities will also be lower. Okay, that's what this means. That's what this means. When we go back to, and hopefully we are noticing a little bit of a pullback there. That is good just over the past few minutes or so. But hopefully this will continue to be the case. If I go to UMBS 6.5, look at that. Look at that drop. Look at that massive drop. I mean, if I go back 3 months, look at that. UMBS 6.5 gives us about a 7.125 rate or so. We're still over par, which is $100. But if I go to UMBS 6, this is going to give us that 6.75 to 6.875 rate. And we are very close to par. Par is $100. If we cross the $100, that means we're in 7% territory. That's what that means. Okay, so this is now the price. The price for a 6% yield mortgage-backed security is $100.70. If this goes under $100, we're looking at 7 to 7.125% rate, because it means that people will now demand a 6.5 yield instead of a 6% yield. That means that the demand for that asset at the 6% is going to diminish. So they're going to expect a higher yield. And you can see that mortgage-backed securities trade in 6, 5.5, 6, 6.5. It doesn't trade in 1/8 or 1/4. It trades in half percentage. And we're noticing a pretty big collapse in the demand for UMBS 6, very close to that par level, which is $100. This is why we've been spot on with rates over the past few years. It's just looking at these trend lines, looking at the demand side of mortgage-backed securities and saying, all right, demand is lower, expect rates to go up. 99 times out of 100, we can look at this and we can say, hey, demand is down, rates are going to go up, have a conversation with your client. On the listing side, if you've executed a contract over the past week, guess what? That third-party financing addenda all of a sudden comes into play, right? If the buyer has not locked in the rate and they had a rate of 6.5%, you're on the phone with that lender saying, hey, please tell me you locked in this rate. Are we going to move forward with this deal? You could very well get a notice of termination under buyer approval on third-party financing addenda. If you went under contract 7 days ago, they've got a 21-day third party and they haven't locked in the rate. We could very well now have a situation where they can no longer get the rate that they placed in third-party financing addenda. So this isn't just for the buyer's agent side of the equation. This is equally, if not so more important, for the listing side of the equation. This is where you've got to pick up that phone, call that lender, have that conversation. Please tell me you locked in the rate. Have a conversation with your seller. Hey, just got off the phone with the lender. They haven't locked in their rate. I've got some concerns. If they don't terminate and they move forward, great. But it's always a good idea. Hey, I don't want to alarm you, seller. I'm simply doing my due diligence. I contacted the lender. I do have some concerns because then when that notice of termination drops, at least you've had that conversation with your seller and you've prepped a seller that, hey, rates went up really fast and I do have some concerns. As a matter of fact, I spoke with an agent here recently where they got their house under contract, but they did not get their new property under contract just yet. And all of a sudden, they can't afford the rates on the new property, but they've already sold their property. So now they're like, oh, looks like we're going to be tenants here until rates go down. So stuff like that does happen. So keep that in mind. Well, you all, it is 11:12. We do like to keep these at exactly 1 hour. So we are slightly over that 1 hour commitment. If you have any questions, comments, concerns, criticisms, or complaints, please let me know. Here to help. I will update the new listing to pending ratio. I'll send this over to you all along with the meeting summary and the recording. I want to remind you once again, mentorship meeting tomorrow, 10 a.m. Love those mentorship meetings. Please join us. Wednesday, broker Q&A, contract review and training. Friday, team meeting. I also have on my calendar right now to send you all the top 100 opportunities today. Today is a good day to send that out. So I'm going to hunker down after this meeting and I'm going to publish the top 100 opportunities. So be on the lookout for that. If there are no questions, comments, concerns, criticisms, complaints, thank you all so much for joining. Super appreciate it. Be on the lookout for a lot of information from me over the next few days. Have an amazing rest of your day, and I will see you all later on.